Jim Cramer says new bull market. Jim Kanos says biggest bear market to come. Here's what you need to know before the bell. Very interesting dichotomy of views coming out. Jim Cramer on one hand saying we are back in a bull market, so it's time to buy the dips. Jim Kanos, famous short seller, saying, hey, the biggest bear market yet is to come, and that has to do because of the Fed and what the Fed is doing, quantitative tightening, interest rates, etc. All valid reasons, and of course it's your perspective on the markets and where you're going from here that's important. So from Jim Cramer's point of view, certainly can make a valid case. As we've been talking about here for a bit, markets have been forming higher bottoms. That's encouraging. A rising trend line, of course, at the same time. The 50-day moving average, very close now to crossing above the 200-day moving average. That's technically the golden cross. That's historically been very bullish for markets. We've had an inverse head and shoulders now that has now completed that pattern. Also, historically, a good bottoming pattern. Technically, lots of bullish formations occurring. And that was our article on the website yesterday talking about bullish formations. I'll put a link right here in the video for you. But this is what's happening in the markets. Technically, the markets are giving you very bullish signs, but there's certainly, to Jim Kanos' view, certainly some economic reasons to be concerned. Yes, probably a recession happening this year. Yes, 2.9% growth in the fourth quarter of 2022, certainly encouraging, but we saw that back in December of 2007 as well. Positive growth and then a terrible recession in 2008. A year later, the National Bureau of Economic Research comes out and says, yeah, after we revised all the data, that recession actually started in December of 2007, a year earlier. So the economic data has a lot of lag effect to it as well as subject to big revisions. So what may seem like strong growth right now may turn out not to be later. Doesn't mean that's the case. But with the Fed hiking interest rates, doing quantitative tightening, reducing liquidity to the markets, that's certainly a headwind to stock prices going forward. So the question is it a bull market or is it a bear market? Well, right now in the short term, it's a bull market. And so we need to treat it right now for what it is momentarily. We can trade this market as a bull market until that changes. And this is what we've talked about before. You don't want to be either bullish or bearish. Just look at the market for what it's telling you, respond accordingly, and when things change your portfolio allocations to meet that new environment. Because the markets are dynamic, your portfolio needs to be dynamic as well. This will change in one direction or the other. Just be ready to change with it. I'm Lance Roberts, and that's what you need to know before the bell.